Hi everyone, hope you're doing well. Today we're going to take a look at Google. Google just reported, or Alphabet, just reported some fantastic earnings, and today we're going to cover it. Apologies, this video should have been yesterday, but I thought I had enough time to get it done, and I had a family meal in the evening. Next thing I know, work's absolutely chaotic, and loads of jobs came up, and I didn't have time to record it, so apologies, but I'll get it done for you on today, and then on Sunday I'm going to try and do a video on Mobico as well, and then also there's a couple of other videos I want to do actually. So yeah, I've got loads of things lined up for the rest of the week going forward. But Google reported their earnings, absolutely fantastic, 10 out of 10 earnings. This is my third largest position in my stock market portfolio, and this was once again a confirmation to me that it should be my first. This has to come my number one position in the portfolio. And what was quite good to see, this is always the perfect situation, is that the stock initially bounced up like 4 or 5% on the day, and I went, no, it's bouncing, and I wanted to keep building the position up. But what then happened during the day is the stock went up, but then it just gave it all back, and the stock only finished up 1% yesterday, which was absolutely nuts, because I was looking at these earnings and thinking, look at how good these are. Like, this company is so cheap, and now the market's finally starting to really realize it. The momentum's changing. And I was like, whatever, you know, I did buy a good amount, but didn't get it to my large position. But then it only went up 1% and he gave a lot of the gains back. And I went, hold on. So you're still going to give me the time to go buy more Google at these levels after that earnings report? Like, the financials have just gone up to another gear in this last earnings report, and yet you're only really giving it pretty much at the same prices as it was before these earnings. Stock market wants to give me stupid prices. I'll go take them stupid prices. I mean, look at Tesla, look at their earnings report, look at how terrible that revenue growth were, look at how bad that revenue growth were, look at how far they missed, and that stock's up 25% this week. You know, you look at Google come off this a fantastic earnings report, and look at how it's rewarded, absolutely crazy. So anyway, before we do that, I have also just done a earnings review of Tesla and Enphase in a little bit more detail on the Patreon. I had to blank this bit out here because it did have a couple of notes down that I didn't want to see unless you're on the Patreon. So yeah, if you do want to go watch that earnings review, then the link's in the description to go watch the exclusive content on there. And I'll also try to get another video to you guys on the stock request this weekend as well. So Google brought out the earnings, fantastic. EPS was a major beat, 0.80 beat on the EPS, over a 30% beat on the EPS. That's absolutely nuts to be beaten by that much. Now, granted, there was a one-time payment in there. A lot of people are saying it's to do with SpaceX. I don't think Google actually confirmed it was that, but there's a lot of rumors on it when you link up the dots, that it was SpaceX, that was the private company that they invested in, with the unrealized gain that they had on there. Now, obviously, a few people have gone, well, that means it's not really a proper gain, so don't take that beat so serious. And I was like, okay, I can kind of see that, but as well, you know, the thing that I really like about Google is they have so much profit that they can just throw it into these other investments. And if any of them hit, then they get rewarded for it. So really, yeah, you can say, well, it's not really a proper gain, but at the same time, it sort of is, because they took that risk with some of that investment because they're so profitable, and now they're getting the profitability rewards for it. So do we mark it down for it? I'm a bit 50-50 on the fence with this one. I've seen a few people completely discount it, and I'm like, well, it's still a gain. It's still something that they've got from, because it's such a good company, they are able to put these investments in and get the returns from it. So I'm not too sure really on how I feel about that, but it certainly shouldn't just be ignored. Realistically, if it wasn't for that gain, they still beat EPS, and they still beat EPS by a very good metric as well. I think it was like a 10% beat even without that payment. I can't remember exactly. I did work it out, but I think it was around 10%. So even without that, it was still a fantastic beat. Revenue growth of 12% as well, which is obviously fantastic. You know, to be Google's size and still growing 12% is just fantastic. And let's not forget, you know, this is right now 2026 numbers, 16 times earnings for one of the best companies in the world, one of the best businesses in the world, and it's still able to pull out 12% revenue growth, and it's at 16 times earnings. Anyway, the earnings actually do get a little bit more even better from there, because when we do look at the revenue, it actually increased 14% on an FX neutral basis. So obviously we've seen the dollar has been getting devalued massively recently. So obviously they've had to convert all their income from other countries and back into the dollar, and that's obviously hurt them as well. You know, the other thing as well is, like, you know, when you look at that point of view, if that was to stabilize, like this actually grew at 14% this quarter, that's insane. Like, for a company at Google size to still be growing 14%, absolutely fantastic growth there. I only priced Google in, I think, at like 9-10% growth going forward. So this is like 3% what I forecasting, and on an FX neutral basis, you're talking like 5% more than what I'm even pricing on my numbers here, which is great. Google service revenue still growing at 10% and still strong. Clearly not any big signs of AI disruption still coming in at the moment, but probably we won't even see that for another few years anyway at the moment. Google Cloud still incredibly strong, 28% growth. And the great thing, as we know, is that when Google Cloud keeps growing at these levels and becomes a bigger part of the business as well, that's going to lead to profit margin expansion because it's such a profitable part of the business. And that's why we saw, for example, even though revenue growth was 12% or 14% on an FX neutral basis, what's more beautiful in the company is not only the revenue growing, but the profit's growing, and the profit grows faster than the revenue growth, and they're having profit margin expansion, and that's happening right now in Google. Total operating income up 20% as well, which is great, and operating margin expanded by 2 percentage points as well. The company also announced a 5% increase to the dividend. Now, obviously, it's not a major dividend that you do get from Google, but obviously a 5% increase is obviously something really nice to be coming in and you receiving it as well. Looking at any comments from the CEO, they talked about how AI is going really well, the launch of Gemini 2.5 and their most advanced product so far. I always think that like Google's being ruled out as like not an AI play, but in my opinion, Gemini is probably the best product on the market. Well, I'm not saying that from a point of view as like being biased, but that's actually the one that I personally use the most and that I seem to see the best product in. And other people seem to be saying it as well. We'll see what happens. It's so hard to predict because it's still very early stages and there's still a lot more, advancements to be made in this space. But yeah, I think people sometimes, ignore it. And you look here and like, it's still growing at 1.5, billion users at the moment, which is just, pretty impressive at the moment. Stock repurchase program, one thing that you always forget about Google is that, yeah, there was the dividend, but also they buy back a ton of stock. And recently they just announced a 70 billion buyback of shares, which is around about 3% of the business, which is, really nice to get in that for that to be happening as well. And they'll just continue to do that because that cash right there is a 2/4, 3/4 of profits right there. It's really nothing for them. Imagine that they can do 7 billion buybacks per year and they're buying back 3% of the company every year. That's incredible. Like that's going to be, if they do that every year, they're buying back 15% of the company in the next 5 years. That's going to really improve the EPS side of it, which is absolutely great to see as well. They said that TV is primary device for YouTube viewing. I think it has been for like the last 2 years. And I thought, you know what, you get so caught up in Google search, don't you? And you sometimes forget like all the other products that are going on, and like YouTube alone. Like you think YouTube has so much potential. Like that's the number one platform that like people are going to be using in their houses going forward. Like people are going to go on the YouTube platform and use it on the TV. Never mind just on the phones, on the YouTube, on the computer, sorry, and on the TV now. And you think like the potential that they have to even scale up YouTube. Imagine the amount of they could even ramp it up to an e-commerce site on there. They have the ability to increase the advertising costs that people have to pay, and the monetization of shorts as well. There's so many like big things that are going to still come from YouTube and how much have it to ramp up. I mean, compared to someone like a Netflix. I mean, Netflix alone is like a 460 billion market cap, and what Google is like a 1.9 trillion market cap. You think that Google, YouTube has the potential to be even bigger than like in Netflix, for example, and that's worth 500 billion alone as well. YouTube Music and Premium reached over 125 million members as well, which is obviously great. I think that has major growth for them going forward. I've been very tempted to switch to YouTube Premium as well at the moment. So yeah, I think that has potential to scale. And finally, Waymo as well is now doing over 250,000 paid passengers. That's scaling up very fast. I don't think people realize if you're to look on a year-over-year comparison, how much that's increased by, it's pretty impressive. And like I said, how much is Tesla as well? How much is Tesla's 900 billion valuation right now getting valued over the fact that they might have full self-driving vehicles? About 900 that billion market cap value is probably like a good 300, 400 billion. and that's not even ramped up yet. So then you're looking at Google and thinking, well, how much is Waymo valued alone? Because if they're doing 250,000 paid passengers, and they're also I don't think I've actually got it up. Oh, I have got it up. So they've also got the partnership with Uber. They're expanding into Austin as well. The public launch in Atlanta later this summer as well. And they're recently going live in Washington, D.C. alongside Miami as well. So these are, we talk about Tesla like, when's it going to come? But, with this company here, you're getting this part of the business for basically free. And they're scaling up dramatically as well, which is absolutely great. And this is like a free bet. What's interesting is also the finishing comments was, and Q2 will be even more exciting. So I don't know if there's something else going to come out in Q2. I don't know, because sometimes you just say that as like, oh yeah, and it'll get even better, and it's just like, you're just saying it. But sometimes like there's, hey, don't want to say too much, but we've got something for you in Q2. So we'll see what, and that might be just a passing comment, but we'll see. It's just exciting, isn't it? Absolutely amazing what's going on with Google. Yet the stock market only gave it a 1% jump on these numbers, with all these beats here and all this excitement. And, even, right now from its all-time highs, it's still down. And, you're still down, 21% from the highs, which is incredible for a company like this. To be getting it at, 16 times earnings, forward earnings, it's crazy. Like, I just think more and more I look at this, I'm like, this has to get to a bigger position in my portfolio than where it is right now. Just thought, let's just have some numbers. Let's do a number check-in and see what's going on. So with Google, 8, 9, and 11% revenue growth if they're able to get up there with that little FX neutral, more impact going on. A little bit more of expansion in the profit margin. We're actually already at a 30% profit margin right now, so that could actually be conservative, but obviously they have the one-time payment jump in there. So maybe I'm actually being a little bit cautious on the profit margin. You know what? I'm going to say I'm a little bit cautious. I'm actually going to drag that up to 32% to say there's a little bit more expansion there. 20 times earnings, not assuming any crazy valuation. The S&P trades at 20 times earnings. I feel, well, it actually trades more than that. So I feel Google should be at least 20 times earnings. And on the low side, 50% upside. On the high side, we're nearly getting the 100% upside there that I aim for when I'm buying a stock. I always aim for 100% in 5 years. And yet on conservative numbers there, really good upside. Now, like I said, Google for me, it shouldn't trade at the market average value. Like a company like Google, what they're doing right now, they should be trading at a premium. This is a premium company. What the premium is, I don't know. I always say 20 times earnings with Google is what I normally throw off at Google. If we do go to 20 times earnings, 28 times earnings for Google, then all of a sudden, yeah, look at the upside. On the low side, 100%. On the high side, you're getting 160 to 180%, or 165 to 179%. And that's only with the current share buyback that they've got on top as well, basically as well. Never mind if they do end up throwing like a 70 billion in a year. That's also not including any dividends as well. So when you're talking like a big market cap, like Google's going to be here in 5 years, and you're seeing like not only 100% upside, but you're actually starting to push on the higher end, maybe even sneaking towards a 200% upside. That's just crazy, just absolutely crazy. Like, that's why I've got to buy Google. I've got to buy Google, and I have been, I've got it to my third largest position, but this really needs to be pushing up to like number 2 and number 1 right now, in my opinion. So yeah, great earnings, and just gives me more conviction. Like, yeah, this is one that I need to be buying more and more of anyway. So yeah, that's just my opinion, guys. You never know what's going to happen in the stock market, but hopefully that was a little bit useful anyway. And yeah, hopefully I'll see you on Sunday for a video as well, guys. Hit the like button, share it out somewhere on your investing groups, on X, wherever. Hit the like button, subscribe if you're not here, and I'll see you in a bit.